Welcome back to REIMAGINE here in our January of 2021 conference. So much to bring you in a new year. There is so much going on this year already underway. It's been an exciting start for the crypto and blockchain space. So in keeping with that, we're bringing you some of the most interesting, thoughtful and insightful people in the spaces, and today is no exception. I'm joined now by Johannes Schweifer, CEO of CoreLedger. Johannes, firstly, thank you so much for being with us.
Thank you very much for the invitation. I'm happy to be here.
Absolute pleasure to have you on board. Now, Johannes, for our audience members who aren't necessarily, fully versed in CoreLedger and everything that you guys are doing, and perhaps a little bit about your own personal story that brought you into the crypto and blockchain space, could you give us a little bit of a brief rundown of both the company and a little about yourself?
With pleasure. Actually, I'm a chemist, so I'm more of an engineer and like the technology part of Bitcoin and blockchain. And I started in 2011, starting by the only thing you could do back then, reading the white paper and buying some Bitcoins. Back then at a very modest price of €4, I remember. However, I also co-founded one of the best known startups here in Switzerland, which is Bitcoin Swiss in 2013. And exited in 2018. Basically, as I said before, I'm interested in the technology. So I got started and got interested by just seeing Bitcoin as the solution to a kind of old problem, which I was always puzzled by when I was reading science fiction. I love science fiction, so I was reading Shadowrun, and people were paying with creds and cred sticks, and I always thought, like, how does that work? I mean, you can copy it, right? And then just by accident, more or less, I came across the white paper and thought, that is the solution. Excellent. So that's how I came into the scene. And yes, as I said, it's the technology which I'm interested in, not the speculation. So with CoreLedger, we built an infrastructure which allows practically every company of every size, and not only companies, but only individuals, to start using blockchain technology.
And that's a powerful and key part of the ecosystem, and something I'm very interested in at the moment, and I think a lot of our viewers are interested in, as so many more professionalized players come on board. And I think that's been a bit of a theme of this conference: professionalization in the space. We're seeing new institutions come on board, bigger scale investments come into the space, and it's moved a little bit out of the crypto mining basement or the crypto anarchist or cypherpunk, doing the individual game, into these organizations, into bigger scale institutions. Now, with your role, at CoreLedger, helping to build some of the fundamental plumbing and architecture in the space, can you tell us a little bit about your perspective on what it means to have these institutions in the space and what you're seeing in terms of institutional investment and interest in blockchain?
The entire space is moving very, very slowly. So, and it's moving from hype to hype. So we have seen the large hype and spike with ICOs in 2016, 17, and beginning of 18, and then of course the rather lengthy period of depression. And in that period, also professional players, as you call them, joined the scene. But from the point of view of using blockchain technology and tokens for financial products, the first approach totally failed. So that was about STOs. STOs as financial products with a huge burden of regulatory constraints. They were not attractive because blockchain technology was not able to really deliver some advantage there. And that's exactly the problem, or has been the problem in recent years and months, that blockchain was regarded as a solution which has not yet found the problem. So of course you can do great things with it, but what's the added value and the benefit? So one of the biggest benefits, of course, is for the financial industry. And that's right. So we have seen the start of stablecoins. Stablecoins is one area where tokenization infrastructure is of value. And then, of course, different kinds of financial papers, like fractionalized pieces of large valuables, like pieces of art, cars, real estate. Also there, it depends on how you define the financial product in order to make it really useful as an investment instrument. In most cases, we have also witnessed that the buyers of those tokens were not really interested in the details and fundamentals. They just wanted to buy something which would give them a big yield, right? So the professionalization at the moment is largely in the area of well, swimming with the sharks and or riding the walrus. So also from hype to hype, and one of the next hypes might be the financial products on blockchain. Nonetheless, apart from all that, is the topic of real use cases for blockchain, and this is much more than just financial products. Of course, a lot of money is flowing into the financial sector and is already there. So this is in the focus of the news at the moment. But apart from that, I mean, you can use blockchain technology for storage certificates. That's a very easy and simple use case, but has largely been unexplored so far. Or you can use a token in order to trigger a switch. Whether a token is on address A or address B means switch is on or off. That's a decentralized way of broadcasting information without anybody being able to interfere, or allowing companies to collaborate. Most companies are by definition competitors. I mean, especially if they operate in the same space. So if one company develops a software which would in theory be of interest to others, they might be reluctant to join that initiative simply because they wouldn't trust their competitor with the governance of the data. But if the data is on blockchain, that's different. And a lot of other such use cases. Professionalization of that has not yet taken off. So that's largely in the shadows of financial institutions, but it's going to come. Back to your question, we are witnessing that many of those institutions are now really rushing, and okay, not rushing in that sense, but rather sneaking into that field, simply because nobody wants to make it too public at the moment, because regulation is not yet there where it should be, but everyone is preparing for that.
And it's fascinating for me to hear you say, you know, that actually things are moving rather slowly. You know, I so often hear, you know, from interviews and conversations I have throughout this conference, everyone's saying, you know, oh, 1 week in the crypto space is like a year in every other, and there's so much going on and so much development and innovation. And there you are putting it in rather stark contrast, saying that in actual fact, while people may be rushing ahead looking to make those profits, the underpinning technology and the underlying developments that still need to be made aren't actually moving as fast as people might like to think or like to appear that they are, because people aren't as interested in that sort of the true strength of the underlying technology. I wonder, you know, with your sort of CoreLedger's vision in general, as you've spoken about the desire to spread information and tokenization sort of throughout the economy and throughout the world, if you could sort of elaborate a little bit on what you think the dangers may be of people racing ahead before the technology itself is really where it needs to be.
The only danger, I mean, okay, there are two dangers. One is if you're too early to the show, then you might need really a lot of money until, I mean, to wait out until the crowd arrives so that you really make business. The other one is that you tap into something which is then a regulatory constrained in such a way that you can't continue that business. With Bitcoin Swiss, honestly, we have been extremely lucky in the past, simply because it was a regulatory gray zone. Launching the same thing today would be possible. Then we also witnessed the ICO of Ethereum. That wouldn't be possible today under regulatory constraints of Switzerland either. And CoreLedger, well, we already thought couple of steps ahead. So placing it into 2 jurisdictions and making sure that what we are doing is not touching any of the sharp edges of regulation. The dangers really are losing money and regulation. But also the world is changing at the moment. So there were, let's say, big powers that could wipe out businesses just like that. And at the moment, we just see power shifting from the west to the east, which means there's also kind of a balance of powers. It's not so easy anymore to just say we forbid this or we forbid that, because then companies would just move from west to east or the other way around. So there's good and bad in it. It's the changing environment and the speed, and of course some uncertainty. These are the dangers.
It is, and it is a rapidly changing environment. I think anyone who lived through 2020 well knows that there is some rapid changes that can come out of nowhere and really surprise any business environment. So I want to get into something that I know is of interest to you over at CoreLedger, that idea of the asset-backed tokens and the potential that they represent. In this sort of world where people want to be able to ensure that they can trade fluidly, easily, across borders, but also ensuring that they can actually utilize tokenization as a mechanism for this sort of safe trading. Can you tell us a little bit about the work that you guys are doing and what the potential you see in the asset-backed token market?
Yep. Well, when we started, there was a big question about whether or not asset-backed tokens would really live up to their promise, in the sense of whether or not the real asset backing would be there. We started in 2016, and the company was founded in March 17. So that was one of the peak. That was the peak of the ICO hype. And back then, people just published a white paper which nobody ever read. People just bought their coins and hoped for a big surge in the price. However, we said that one of the cornerstones of a viable solution would be documentation. You want to know what you've actually got. If it's about an asset-backed token, then you want to know what is it, where is it stored, which quality is it, and of course, that documentation you can use for anything else. You can document not only the asset, but also document and put on blockchain kind of a certificate by an auditor, proving or witnessing that the asset is really there. So one of the challenges which we thought would be there in the token space, and which actually materialized, is getting proof whether there is value behind and whether there is a real asset or just air. And so our solution, of course, covers that, allowing tokens to be documented and described in full 360 degrees. Plus, tokens are still just counted by arbitrary numbers, 1, 2, 3, 4, 5 tokens. And CoreLedger introduced a way to give it a unit of measure. So if you tokenize real assets, and especially when we talk about asset-backed tokens, then it's square meters, liters, cubic meters, kilograms, whatever, tons, grams, ounces, all that. So you can add a unit of measure. And what's most important, and also nobody thought about that in the beginning, you have to add some kind of storage costs calculation into it. If assets are stored over a long time, and if the token is used as some kind of a coupon or storage certificate, which you can use to claim the real asset, then what happens after 10 years? I mean, storing gold over 10 years incurs some cost, right? So how to account for that? You can account for it by just charging the first buyer of the token. That's unfair. And you can charge the one who converts it into the real gold. That's unfair as well. So who can foot the bill? And the solution which we found was by introducing a formula which converts the number of indivisible units on blockchain which we own into the unit of measure. So just imagine you have 1 million indivisible units, and they represent one ounce of gold. And if that conversion rate is adjusted over time by a formula on blockchain so that nothing and nobody can cheat, then after a year, for example, it needs 1,010,000. So if you still have 1 million, nothing changed. So no, I would say that's the unwritten rule of blockchain that no third party should ever modify your account which is logical, but well, nobody thinks about that. So you can't just take tokens, but we don't take tokens. It's just the conversion rate which changes. You still have the million, but it's just worth a little bit less than an ounce. And that's the second thing. So converting the documented asset into units and calculating the value of those units. The third is governance. So also in the beginning of the ICO hype, there was a need to just do KYC at the beginning, very loosely and very well in a simple way. And then with the STOs, it was full compliance and heavy regulation. However, even with tokens which are not financial products, you might need some kind of rules just to restrict the ownership or restricting the transferability for whatever reason, like allowing only a single party to turn a certain switch and put a token from address A to address B or whatever. So in order to do these restrictions, there is kind of a plug-in mechanism which allows to add governance. And the last and maybe strongest thing is the value conversion. There we thought about the problem of having many different asset-backed tokens having the same unit of measure and denomination, like US dollar tokens. So the fiat currencies and stable coins, they're the best example for what we have built. So already at the current time, we have, I think, 20, 30 different US dollar tokens and more to come. Also in Switzerland, a handful, and of Swiss franc tokens, of course. And then if you have different tokens, then they're different, like apples and bananas. And we found a way how to seamlessly link and convert them into each other. We call them a warp. And this warp technology we also submitted as a patent in order to protect our technology.
Is this warp technology, is it similar to atomic swaps? Does it build off the same principles, or is this a sort of a newer technology that you guys have put together?
It kind of builds on top. So it takes into account the idea of the atomic swap, which is something which is unique to blockchain in general. Atomic swap means that you can convert one asset into another asset between two parties, and that conversion is done simultaneously. So token A is converted into token B, and there is no way that one party could opt out in the middle of the transfer. So that is nice, but if you have several conversions which have to take place consecutively, then there was no solution for that, and we built that solution. So you could, for example, trade, let us use an example. You have two different dollar tokens. One is green, one is red, illustrating different issuers, thus being different. You have the green dollar token, but a certain trader offers you a commodity for the red dollar token. You would have to convert atomically, hopefully, your green dollar token into the red dollar token. Then you can again atomically purchase the commodity. But there is just a time difference in between step 1 and step 2. So if the commodity is already gone, then so you have to convert back. And what we built is the combination of step 1 and step 2. So for you, it looks like a seamless conversion of the red dollar into the commodity without anything in between. And that allows to do different things like location swaps or direct conversion of financial titles into each other, or barter trading on blockchain. We recently wrote an article about that, how it works. That could even replace currencies in the long run. Maybe not replace, but just make the use of currency transparent, and using real assets like investments into revenue share tokens as some form of money, simply because assets like a tokenized cattle ranch or a soybean farm or whatever is a stable value, which is definitely also stable in times of inflation. So people might save in that currency if they have a chance to easily get out of it and then purchase something which they need, like diesel for their cars or whatever. And our technology makes that possible.
Certainly a very powerful tool. I would wonder as well if you've thought about or you're interested over at CoreLedger in going into the field of NFTs as well, because obviously at the moment we've been talking about largely fungible items, whether we talk about one soybean versus another, whether one cow or another is truly fungible, I guess is up to the markets to decide. But if we get into the NFT space, it's certainly one that has had a lot of interest. Towards late 2020, there was a big sort of surge in expectations there, and I wonder if that's something you're also looking at over at CoreLedger.
Frankly speaking, not directly. I mean, we are not focused on it. We support it also there indirectly. So NFTs would have to be built by individual assets with their own ID. So the original concept of NFTs is not one-to-one applicable on CoreLedger. We built a solution which we are not using right now, but could use in the future by using the individual 256 bits of every account as tokens. So you have 256 individual kind of NFT fractions of an asset, but that is not even enough to use it for seats on a plane or something. So practically the support of NFTs in CoreLedger is not the best. So we are more focusing on fungible items simply because this warp technology would not work to full extent with non-fungible tokens.
Absolutely, it makes perfect sense. So then going back to the sort of asset-backed tokens and the tokenization of the world, I guess I want to look at it. Obviously, this technology has sort of proven itself quite useful when we talk about commodities, real estate, obviously the financial markets. Highly useful in a technological and theoretical sense. But are you starting to see more of this, I guess, where the rubber meets the road situation where regulators or certain markets are actually starting to take up the use of these asset-backed tokens on a larger commercial or even industrial scale?
Well, we are at the very beginning, frankly speaking. So also real estate tokens so far were about property, not really about property. It was mostly a share for a SPV, a special purpose vehicle. And that was not let's say the biggest yield yet so far. So it was most of it was marketing in a certain sense, but that is necessary. Also the trials and failures of blockchain altogether in the last couple of years, they were and they are necessary. So only by doing that, by trying things, you learn. And what we think will happen is either in 2021 or 22, the whole space will really take off in that sense that a couple of those applications will prove themselves to be the killer apps. And well, this will propel the entire space. I mean, I don't know whether the real estate sector will be the sector where we see the killer apps or payment or coupons / vouchers or, well, asset-backed tokens in general, which is a really broad field. I mean, that can also be used for trade finance, supply chain management, and so forth. So it's a vast area. Let's say when we say asset-backed tokens will be those which take off, I would bet on that. Yeah. Simply because people are interested in an underlying. That's the point. So we had a lot of vapor trading in the past. The asset-backed tokens, as long as they are, I mean, as long as the asset backing is proven or can be proven, this means that there is a value in behind. So that's the reason why we think this will be the future.
Completely understandable, and I guess as well, it's an interesting point in an era when regulators are in some ways quite wary of some of, I guess, more focused on cryptocurrencies than blockchain, but certainly some of the capacity that sort of cryptocurrencies have to upend certain markets. We've recently had statements from the likes of, Christine Lagarde of the ECB and Janet Yellen, the incoming Treasury Secretary, have come out and made statements saying that they're concerned about Bitcoin or about cryptocurrencies or about the potential for these technologies to cause damage. As a technologist in the space, as a businessman in the space, is this something that concerns you in any way, or do you think this is just sort of public pandering and big rhetoric?
Well, they still move public opinion, right? And there's a lot of leverage in cryptocurrencies and tokens, which means there are traditional players in that market seeing it from a traditional point of view. So if the incoming US finance minister or the ECB governor says something like this, then of course they just take a safe position and sell their cryptos, at least a part of it. So we saw a market move today and already yesterday. I'm really looking forward to a time when the markets are not that much affected anymore. Like kind of the incoming US administration barking at Bitcoin and nobody cares, right? So, sorry to say that, but it's honestly not, I mean, especially currencies and means of payment, they should be privatized in some sense. So by heavy-handedly regulating the crypto space and token space, of course, central banks just try to retain and regain their power and their control. So I'm not an anarchist, but I believe the best for people would be if they can just choose the right currency in which they want to transact.
I mean, Johannes, you look to me, you seem to me to have the look of an anarchist. You know, I saw you and I thought this man has anarchist tendencies. But beyond that, look, I mean, obviously you've put your sort of foot down in terms of a full-throated support of the crypto market space. As recently as the start of the year, it was reported in Decrypt you saying that you believe that Bitcoin could surpass $100,000 in 2021 in value. Here we are a few weeks into the year, and we've had a change of administration in the US. We've had these comments come out. We've had some pullbacks in a market that seemed to be barreling full steam ahead. Do you stand by that view of the six-figure price, or rather the five-figure price, or do you a six-figure price rather, or do you think that might have been a bit premature?
Absolutely, but I'm not cutting off any of my intimate parts if I'm wrong.
All right, fair enough. We won't hold you to that here, and we won't hold you to that here and now.
Fairly spoken. I mean, I've witnessed the ups and downs already since 2011. I mean, when I first invested €4 back then, the price retracted to I think 270 or something, and I thought, oh no, almost lost half of it. I mean, 270, right? And then it went up to I think 100, and again it retracted to 20 or 30. Oh heaven, what a crash! And all the time it was ups and downs. One of the biggest advantages of Bitcoin is it's well, mostly decentralized. There's still some centralization in that sense, that most of mining power is at the moment in China, but nonetheless it can be influenced, but it can't be controlled. And I think that's the reason why it moves widely.
Certainly, you have the stoic eyes of a man who's been in this space long enough to know that the roller coaster goes down, but it does come back up eventually. All right, so then just in general, moving beyond price and looking generally towards 2021, everyone's sort of got a little bit of optimism in the air. I like to think there are vaccines, there are stimulus checks, there are all sorts of things sort of on the prospective horizon, giving people pause for hope. What are you sort of looking out for in 2021? What are the sort of key innovations and developments you might expect in the crypto and blockchain space?
Well, institutionalization of a lot of crypto derivatives. That's well, for blockchain or for Bitcoin and coins alike. Maybe Litecoin might follow suit, but it's most likely focused on Bitcoin because there is the biggest market cap. But in terms of using blockchain, I think in 21 applications like storage certificates, yes, that might be one big area. Then trade finance. I mean, a couple of big players have already moved into that area. And then, of course, just tokens in the form of financial products. This will definitely take off in 21, simply because it's easier to tokenize financial products than to create full-fledged financial products with prospectus and all that, putting it on an exchange. I mean, stock exchange, right? That can take years. And doing the same as tokens on blockchain is kind of simple. And then, yeah, of course, I think the decentralized exchanges of the like Uniswap and SushiSwap and so forth, they will just attract more and more billions. during that year. But we've also seen that only large players are moving there, simply because it doesn't make sense for small players to pay the high amount of gas and transaction fees which are necessary in order to use those exchanges. So it's kind of, what's that called? Kind of elite being amongst themselves, right? When trading on such decentralized exchanges. So this will, of course, accumulate more billions this year, but not for the general public. General public might join the party through their banks, which also answers another implicit question, which I'm always asked, like, do I believe that banks will disappear sooner or later? Maybe already in 21, I don't. So I don't believe that they will ever disappear, and I don't want them to disappear, quite in contrast. So that's the point. I'm not an anarchist, really, not even in the financial sector. There's no other institution which could really do something for customers, which is the most important when storing values, protecting those values, safekeeping of private keys and all that. People are used to just logging into a web banking account, and if the web banking account is down for whatever reason, they rest assured that their assets are safe. If your own overlord, the overlord of your assets, having the private key with you, and if you happen to lose it, bad thing. So people are afraid of that, and the general public is definitely not as tech savvy, or not tech savvy enough to do that for themselves. So it's the role of institutions like banks to do exactly that.
An important lesson. Sometimes there are those out there that need to ensure that there's someone standing as an intermediary in the way between them and the abyss. All right, well, Johannes, I want to thank you so much for taking the time to speak with us, to speak about your vision of asset-backed tokens and the future of tokenization across the market. I won't call you an anarchist just yet, but certainly you've got the eyes of a man who has some anarchist tendencies buried deep down. Johannes Schweifer, I want to thank you so much for taking the time to speak with us.
Thank you very much. Goodbye.
Thank you. And for all those viewing ReImagine, so much more good content to come. Make sure you stick with us.